layer 2 layer 2s and rollups, specifically ZK rollups, are going to be a huge narrative going into this next bull run. We're covering a project today that falls under both narratives, leveraging layer 2 solutions to increase scaling efficiency. Manta aims to provide scaling solutions while keeping a huge focus on privacy as well as keeping costs low. Today, we're going to be diving into Manta. We're going to go over ZKPs, zero knowledge proofs, and we're also going to go over how Manta plans to use these scaling solutions in tandem with their layer 1 blockchain. How you doing today, bro? Long time no see.
Doing good, man. Ready to dive into some ZKPs. Like he said, we're not just going to go over Manta and what they're doing. We're going to go over the tokenomics. We're going to go through the analytics, like all the analytics. The good thing about Manta is they have a lot of analytics on a lot of different platforms. The developer commits, like literally everything. Y'all know how we do when we do the fundamental deep dives. We give y'all everything. And at the end, if you stick around, we're going to give you guys our non-biased opinions. We're going to try to hold it until the end of the video because, you guys are usually able to tell as we're going through it. We're going to give you our non-biased opinion and let you know if we're buying Manta or not and why. So without further ado, you ready to hop in it?
Let's do it.
Let's do it. Okay, guys. So first, before we even dive into it, we got to break down what a layer 2 is.
I'll give you a hint. It's not a layer 1. Like, nah.
We're going to break down what a layer 2 is and what zero knowledge proofs are before we hop in. So basically, when it comes to a blockchain, you have this thing called the blockchain trilemma, where you have decentralization, scalability, and security. Most blockchains are optimized for 2, right? So within a blockchain, you have 3 different layers. You have a consensus layer that says what's true. That's how the network comes to a consensus. You have a data layer, which stores the information that happens in each block. That's why you hear about these parallel shards that run alongside of the blockchain. And then you have the execution layer, which is your computational finality. And that is the area where layer 2s are aiming to help, because a blockchain is in the business of selling blocks, and it's only so much space that can fit inside of each block, just like it's only so many people that can fit inside of a plane. And the more people that are bidding to get inside of one plane, the price of all the tickets are going to go up, just like the gas fees go up once you have the storage and the execution and the consensus happening on the mainnet, in let's say Ethereum's case. So layer 2s are designed to roll up all the transactions, hence the name optimistic and ZK rollups. They roll them up and they compress them into the smallest packet of data possible, and they submit it to the layer 1, ETH, and then ETH unravels it. Similar to when you compress an email and you send it off, when you open it up, then you're able to see everything. And by compressing it, it makes it smaller storage. So when it goes to the mainnet, it's much smaller and more can fit inside of the block.
And this is all processed off-chain. And the biggest difference, or the way I like to look at optimistic rollups versus zero knowledge proofs, when you have an optimistic rollup, they assume each transaction is true, hence the name optimistic. So they're optimistic that each node is telling the truth, and they're looking for the fraud, if that makes sense. ZK rollups is just the opposite. They assume each transaction is false until proven true. And so that's how I like to break down the difference between a ZK versus an optimistic.
Yeah, and just moving forward on the layer 2. So by having the execution happening on the layer 2, this also means that, or this is speculation, but I feel like it's pretty obvious. I think most of the applications are going to be built on layer 2s instead of layer 1s because they're much faster. We live in the microwave generation where we want everything fast, and layer 2s do that perfectly. And they save on cost because you're not really competing to get inside of each block.
And thanks to the nature of a monolithic blockchain, layer 2s specialize in increasing throughput by decreasing congestion. And so the amount of data that is available, and we're going to go through data availability as well, which allows nodes to validate not the full block, but samples of the block, a very small piece of the block, which decreases the amount of computational power that it takes to validate a transaction.
All right, so now let's dive deeper into what is the zero knowledge proof and what problem are they solving? So A zero knowledge proof is basically a protocol which someone, they call an approver, can prove the correctness of a statement to someone else, aka the verifier, and they do this without disclosing any additional information. So think of Where's Waldo. This is a famous example that everyone gives. Let's say you're trying to find Waldo. A ZKP basically proves that you can find something without showing you how you were able to find it. So like, for example, going back to the Where's Waldo, let's say you have a giant picture of a bunch of people. A ZKP will show you a very, very small picture a small circle, and you can see Waldo's face. You can't see where he is within the whole picture, and you have no idea how they found it.
Yeah, and so you can kind of look at it as when a transaction goes through, let's say Waldo is the transaction, all the people around Waldo is kind of like all the extra data that when it's compressed, it kind of gets jumbled up in a way, so that way it's virtually untrackable, and then it spits out on the other end. That's a very simple way of looking at it.
Yeah, and when it comes to use cases for ZKPs, there are a lot, specifically for like large companies, people too. Like the one thing about most blockchains, because you have permission and permissionless blockchains, the permissionless blockchains like Bitcoin, like ETH, is a public ledger. And you can see all the transactions. If I'm a competitor, let's say I'm in the supply chain, or a manufacturing company, and I'm buying X amount of materials, I don't want my competitors to see what I'm buying or how much I'm buying. But when I'm buying from people, they need to know that I have the money, and they need to know that I'm the person that I say that I am. So ZKPs help make all of that seamless.
And there's been kind of an ongoing debate whether optimistic rollups or ZK rollups are better. Now, with optimistic rollups, there's always a chance you're going to get, or a higher chance that you're going to get a fraudulent transaction pushed through because they're optimistic and it's not mathematically proven. And with ZK rollups, some would say they're not going to be ubiquitously used due to their computational intensity. But I do think long-term ZKPs will be used more than the optimistic rollups as we start to experience deflation in the hardware price, because that's really where the cost comes from with ZKPs.
Yeah, and also they're faster too. Like he was saying, it's the challenge period for optimistic rollups. So if you want proof of that, go and try to use the native optimism bridge, and you're going to have to wait 7 days for your transaction to go through unless you use something like Stargate, which is a little bit more risk because it's not a native bridge. You know, it's like burning and minting and different things like that happening. But I do think that zero knowledge proofs is the superior technology, is faster. And once the costs are able to get down, which we always figure out in every kind of industry, we can make cars cheap, we can make ZKPs cheap. I think it'll be better. It's just newer, it's less battle tested, but I think it has better potential.
It's kind of like flat screen TVs, right, back in the day. So think about how we don't call them flat screen TVs anymore. They're just TVs, right? So any type of hardware goes through that deflationary cycle, and it kind of starts off where ease of use is more important in the beginning. And as we go forward, speed becomes more important. And so the pendulum should start swinging from optimistic to ZK very slowly. And we'll see that in real time for all of us participating in the market on a daily basis.
All right, now let's dive into the Manta Docs. Now that you guys know what a layer 2 is and what a ZKP is and the problems that they both solve.
Yeah, let's dive into those docs.
All right, let's dive into the docs.
Let's dive into the docs right now.
Dive into the docs. All right, guys. So it says, what is Manta? Manta is the multi-modular ecosystem for zero-knowledge applications. So modular means you have a layer or multiple layers where each layer specializes in something. So just like how we talked about the 3 layers to a blockchain, a modular blockchain has a layer 2 to help with execution, a layer 1 to help with consensus, and sharding to help with storage. That's having a modular approach versus monolithic in the sense that all 3 of those things happen on the chain. So to say that they're a multi-modular ecosystem means they have multiple modular layers for specific zero-knowledge applications. So they have 2 different networks. They have Manta Pacific, and we're going to dive into both of these. So Manta Pacific says the unique L2 ecosystem on Ethereum for EVM, which is Ethereum Virtual Machine, which is if you make your code for the zero knowledge proofs. The code works on all Ethereum virtual machine compatible blockchains. So that's Avalanche, that's Polygon, et cetera, et cetera.
And the beautiful thing about their multi-modular ecosystem is that you don't have to do the coding for ZK application. They kind of have it all laid out for you.
You're doing it for ETH, basically.
Yeah, you're doing it on ETH, or you're doing it for ETH on the Manta Pacific Layer 2, which takes out a lot of the research and the cost that you would have to put in yourself to generate a ZK application.
Yeah, and just more specifically, guys, like if it was not that way, if you wanted to, let's say, deploy a ZK application and then deploy something on ETH, you would have to be coding in different languages, which means, like he said, you're spending more resources, you're paying more developers, you're having to research more, you're paying more to have your code audited just to make sure there aren't any bugs and everything is seamless. So it says, for EVM native ZK applications provides a scalable and inexpensive gas fee environment for ZK applications to deploy simply using Solidity. Manta Atlantic is the fastest ZK-L1 chain on Polkadot. So it's a layer 1 chain. And it says it brings programmable identities and credentials to Web3 through ZK SBT. So Polkadot, if you haven't heard of it, it's a layer 1 blockchain. And they have a unique little model where they use these things called parachains. And if you want to get a parachain, you actually have to win a parachain slot through an auction. And it's almost like the Cosmos hubs where they connect to each other. They have a hub and they're interoperable with other chains. So you have a lot of these layer 1s trying to nail in that interoperability layer. And another thing I like about Polkadot is that they're trying to make it so that you don't actually have to have any tokens to use the network. Because on blockchains, you have to pay gas fees with the chain's native token, most likely, or most of the time, ETH gas fees on ETH. I think on Polkadot, they just want you to use like US dollars or whatever your native currency is, because they realize that you close off a lot of people, especially here in the beginning, through having to buy Polkadot and then use that as gas fees.
Yeah, you actually pay your gas fees on the Manta Pacific L2 in ETH.
Yep. So it says together, Manta Pacific and Atlantic deliver an unparalleled experience for the next generation of Web3 application development and adoption with the applied usage of zero knowledge technology. And they talk about, who created it. So they came from prestigious institutions like Harvard, MIT, Algorand, and they've gotten investments from some of the top funds, including Binance, Polychain Capital, and they have a lot of people from Web3 accelerators such as Alliance DAO and Berkeley Blockchain Accelerator. That's right up the road. So let's dive more into Manta Pacific and Manta Atlantic, starting with Manta Pacific. So starting, it says, why do we need another layer 2? So it says, today there exists no home for EVM native ZK applications. So you have a lot of regular applications you can build that are EVM compatible, Avalanche, Polygon. Most of the layer 1s are EVM compatible. If you look at blockchains as cities, Ethereum is like New York. Everything connects to New York. It's the finance capital.
It's like at this point, you kind of want to be EVM compatible. Even BlackRock's tokenized fund is built for EVM.
I don't know if I would agree on if you want to be EVM.
No, you kind of need to be whether you want to or not. That's how I think about it. Just because ETH as a utility, it's so far ahead of any other.
The only reason why I would say you don't need
network.
to be, so Radix is not an EVM compatible blockchain. And the reason why I like that is because one thing about the EVM is that developers complain that the programming language Solidity is too confusing and hard to code in. And that's why we're seeing all these hacks despite multiple audits, expensive audits that companies get. So if you can have a blockchain where the programming language is easier or is something that is much superior to ETH, then I would say so. But if you're just a copycat, you need to be connected to where the liquidity is unless you have a huge incentive to draw in your own.
I can agree to that. But this is why also there are so many layer 2s that are trying to decrease the difficulty of coding in Solidity kind of by doing it for you. Because at this point, being EVM compatible I still think is important for most projects.
I agree.
Except, projects like Radix and others who aren't EVM compatible.
Yeah.
But they've, garnered value and attention.
Yeah, like for example, Cardano. They're not EVM compatible, but the market cap's huge because they do marketing really well, but they're severely overvalued because it's only a couple $100 million on the chain.
I still don't know in terms of development where this is not a Cardano video, but I don't know where they are right now in terms of development. I haven't looked in a while, to be honest, because the last time I checked, it's just Mr. Charles just, going around giving his talk shitting on Ethereum.
Yep. So it says current solutions do not fully address the needs of ZK applications to deploy and grow users in a scalable manner. General VM, EVM blockchains, and ZK EVM don't provide the tooling to easily build and deploy ZK applications. So if you manage to deploy one, your users will be burdened with high gas costs and slow performance. ZK networks that provide VM environments require developers to pick up a new language that lock those applications into specific ecosystems with a limited user base. So that's kind of like we talked about. You have to, program it in different languages. So it goes on to say Manta Pacific unveils Universal Circuits 2.0, and this elevates the developer experience specifically for deploying EVM native ZK applications. And it says they offer a ZK as a service, allowing any Solidity developer to call Manta Pacific contracts through APIs to enable ZK features such as compliant private identities for DeFi, identity verification for Web3 social, and much others, with just a few lines of code.
And so it goes on to list the key features or notable features, and we just covered the first two. But this third one, leveraging Celestia for data availability and the ZK EVM for scalability. Manta Pacific provides high scalability and low transaction fees for ZK applications. So Celestia, they're also a modular blockchain specializing in data availability. I kind of touched on this in the beginning, but the problem that they're solving is, let's say blockchains start to garner more data or grow in size. It becomes increasingly harder for a node and more expensive for a node to verify all the data that it's within one block. And so data availability allows light nodes to perform data sampling. And so, or DAS, data availability sampling, which means they only download a portion of the blockchain or that block. And that allows them to verify that the rest of the information in the block is therefore true and has been published. And that also increases throughput. So you can see how Manta has a high focus on scalability while keeping fees low and keeping speed fast, but also leveraging security through ZK. And so as we touched on in the beginning, this hits all three prongs in terms of that trilemma.
All right, now let's cover Manta Atlantic. This is the layer one that we talked about is on Polkadot. So it says it's the fastest and most decentralized ZK layer one, supporting modular on-chain compliance identities. We talked about how businesses and, they don't want their transactions all out there, but they still need their identities to be proven. So its suite of core products and technologies, including ZK NFTs, staking and ecosystem products, offers user-friendly access to powerful ZK-enabled use cases. And it says, compared with those ZK identity layer ones to build a ZK smart contract language, Manta Atlantic is focusing more on the ZK compliance credential layer with real adoption and interoperability to make other projects have interoperable identities, meaning they can prove their identities and do all these things on other chains, most likely EVM compatible chains, without dealing with any cryptography work. And it's good that it's like this because while the EVM part could be interoperable if you were just to do it normally, the ZK EVM would not be interoperable. So it's good that they're doing that because now you can take that and go to other chains.
And so I like to separate these two, the layer one and layer two of Manta like this. So on the Atlantic, which is their layer one, that's where all the governance takes place. That's where if you are a validator on the Manta Atlantic, you would hold Manta to participate in the governance. And layer two is where all the development in terms of their applications or ZK applications take place. And so once again, their focus on scalability shows in that they're keeping all of the congestion off the layer one by doing the governance on the layer one and just keeping the development in terms of their ZK apps or ZKApps on the layer two.
So now this is as technical as we're gonna get, guys. I know this is a bit of a brain scratcher here. So it says Manta's ZK circuit and infrastructure has been developed by 2 years, and it has public account-based address system and a UTXO-based private address system. We call it ZK address. The ZK address shielded information includes SBT minting, on-chain credentials, off-chain identities, and it's the first private address system that's reusable, independent, and auditable. So I want to talk about UTXO, which stands for unspent transaction output. So basically, the UTX model is like when you go and spend something on crypto, like when you go do a transaction on Ethereum, what happens is they'll give you like a gas fee estimate, and they'll tell you like, this is the most that you'll pay in gas, but this is what you'll probably pay. And this is a big reason why we need layer twos for retail, because it would be like going into a store and you go to swipe your card, and before you actually pay, it says, oh, your fee will be between $10 and $100. It could vary that much. And if you guys have done transactions, you see that it does if you know how to read the transaction manifest, which is a whole nother thing in and of itself. But the UTXO basically is like when you go to a store and they have like a little jar of pennies and you don't have change and you're like 2 cents short, you take a penny and now it's settled. If you don't use it, someone else will use it. That's exactly what UTXO is. It's a little bit left over for each transaction, but it doesn't belong to a specific wallet. It more so belongs to the network.
So theoretically, it should make ongoing transactions cheaper within that chain, but they can still be very expensive sometimes. In SBT, once again, I feel like in our last 3 videos, we've covered projects using soulbound tokens. So I'm definitely expecting to see more of that. It's just a way of verifying your identity. It's like an NFT for you with your identity in it. So that way it doesn't have to, I guess, sometimes you can get around a KYC process using this. I guess that depends on the protocol and the regulations around that particular project. But it's a way to verify that it's you, put simply. Hence the name soulbound token. It's soulbound to you or your wallet.
All right, guys, so we're kind of out of the weeds here. So now let's give you the high level. So let's start to go through the tokenomics and see if it's actually a good investment. Because a lot of times, most of the time in crypto, just because a project is good, it doesn't necessarily mean it's a good investment, because you can have some VCs waiting on a cliff or an unlock next month so they can sell and make money for their investors. And now it doesn't matter how good the project is, it's the price is supply and demand all day long. So if you got whale selling, and it's not tokens being burned or anything like that, price go down. So let's dive into the tokenomics. All right, guys. So if we look here, you can see that the market cap is 495 million, but the fully diluted valuation is 1.9 billion. So around a little over a quarter of the tokens are unlocked. So we need to figure out how and when the remaining 75% or so are going to be unlocked so that we don't get dumped on if we decide to buy. So if you go to CryptoRank and you look at the tokenomics, you can see that 30% is unlocked. So around a quarter, like we said, and you can see where the unlocks came from. So 6% was unlocked to the ecosystem, 0.5 to the treasury. The team and private investors has not had any unlocks yet, and those are the people who wants to sell the most, guys. So we need to see when that's happening. So if you scroll down here, you can see that it's linear unlocks for the ecosystem, for the treasury, for 6 years, for advisors for the next almost 3 years, 2.5 months for public investors. And then you have some unlocks coming up in 2025 for private investors, for strategic investors, and institutional investors. So if I were to buy this, I'm definitely selling before these things happen.
And this is on top of a 2% annual inflation rate built in the protocol.
Yeah, so it's just like, I'm not a big fan of these tokenomics. I'm gonna be honest. I've seen better. I've seen worse, but I'm not a fan of these tokenomics. Like you're competing against all these selling pressures from all of these different groups of people. All right, now for the good part. Let's look at their analytics and let's see if people are actually using this platform or developers building on it. Like, what's happening on Manta? All right, so we're on the Manta website, and under networks or under developers, you have all this on-chain data. So we're gonna go through some of these, starting with DeFi Llama. So remember, they have a $495 million market cap, but they have a TVL of 188 million, which is good, but is not close to the market cap, which means this project is fundamentally overvalued. Now, that doesn't mean it can't pump more, and I think it will pump a lot more.
Yeah, in crypto, projects can go or Web3 projects can be severely overvalued before they have a significant correction.
Yeah, I mean, you guys, if you haven't watched our video on Mantra, go give that a watch. That's an overvalued project. And it's funny, the only reason we're doing this video is because I told him we're doing Mantra, and then he couldn't find it, and we ended up doing Manta, so we weren't even going to do this one. He just...
I went a deep dive on Manta as opposed to Mantra. So they're different, Mantra and Manta.
Man, we got home, and he was like, man, I would buy it. And I'm like, why? And he was like, man, they doing all this shit with ZKPs. I'm like... what the fuck am I missing? They doing shit with ZKPs? I had to go through all my research again, but we were just looking at different projects. Funny.
Happens.
Yeah. Actually, it doesn't. It happens.
Apparently, it happens.
All right. So you see, so you see this TVL, and you see it's been dropping like a rock, kind of, while the TVL in DeFi has been trending upward. So I don't like that. I want to see this kind of start to turn, especially if we're in a bull market. Like, if you don't got people using your shit in a bull market, they ain't ever going to use it.
I'm always a proponent of simplicity wins over complexity. And this is one of those complex projects that if they can continue to simplify, at least within their marketing, they'll start to do better. But right now, it's a fair bit complex.
Yeah, I like the tech. I love what they're doing. And you can tell they're working hard. They just got a little bit more to dial in. Let's go through some more of these. So if we look at volume, you can see volume's been kind of dropping off. Fees has kind of been dropping off. Revenue for the protocol has been kind of dropping off. All right, now let's check out L2 Beat. So this basically shows the value locked across all layer 2s. You can see it's 39 billion, it's up 11% over the past week. Arbitrum is in the lead by a long shot with 17 billion. You got Optimism, Base, Blast, Mantle, Starknet, and then at number 7 you have Manta Pacific right here, 957 million. So, you know, this is weird because on DeFi Llama it just said it was what, 180 something million, but now it's saying that this one's 957.
So this one's the layer 2. So about 750 million was bridged over from the layer 1 to the layer 2.
Wait, was that one on DeFi?
So we were just looking at the layer 1, the Atlantic. This is the layer 2.
Okay, so they may not be overvalued, actually. I might have to take that back. You can still see it's kind of been dropping, but nonetheless, it's still over what the market cap is. So I like that.
And I would say they actually still are overvalued at this point because the layer 1 TVO is, it's extremely low. And that's the main chain for them.
Yeah, I guess you have
all
to
the governance.
Yeah,
so they are still slightly overvalued, but we'll see what happens moving forward.
All right, and if we look at Web3 Go, this kind of gives you an overview of like just all of the activity that's been happening on the blockchain since its inception, or on the layer 2 since its inception. So you got total transactions, wallet addresses, total active addresses, total verified contracts. This has kind of been flatlining out. But the good thing is, all these accounts that were created, even though the creation of accounts is slowing down, the people that created the accounts are still active. So they're adding to it. You got the total addresses just growing. You have the daily transactions. Looks like it's been growing a little bit lately, but definitely not as much as it was last year. Like it's trending upward a little bit, it seems like. And then the daily bridge transactions have also been dropping down. Total bridge transactions, obviously a lot. Gas fees consumed on the L1's kind of been dropping off lately, but in totality, if you look at the long-term trend before like January, it was going up. So yeah, a couple things good, a couple things not so good. All in all, I do like the project though. So now guys, let's look into the ecosystem because like we said, if people aren't building on it and doing things on it, and other players like Alchemy aren't coming to the platform and building it out for Manta, by them building it out for Manta, they're anticipating that they're going to get their money's worth for the development it took to develop on a ZK EVM, right? So you have Aperture on here, which I've made videos on my personal channel, got BNB chain. And you see this button here, or this right here, it says live on Pacific. So some of them are live, some are not. So I don't know what the ones that aren't are. Maybe they're working on it. But they have a pretty good ecosystem. And I'm not sure what all of these entities are doing on it.
Yeah, it's a pretty diverse ecosystem from gaming to incubation to DeFi and payments to payments and like payment gateways. So it's pretty diverse.
Yeah.
Which is good.
Yeah, so this is good. A lot of
A
stuff.
bunch of auditors on here as well.
Yep.
A lot of tooling software. So they're pretty diverse, which will only aid in their growth. So would we buy this, or are we buying this currently? I'll start this one off. Not now. It's not a screaming buy for me now. There are a lot of other projects that are clearly undervalued that we've covered a lot of them already. And so just going to keep building the bag on those. But moving forward, as I said earlier, if they could find a way to implement simplicity within their marketing strategy, because that's really what it comes down to. You can't just be like, oh yeah, we got some ZKPs and a bunch of technical other shit, like a bunch of other technical shit. That's just going to either put people in a paralysis state, or it's just going to turn them away. And so if they can find a way to simplify their marketing moving forward, I can see it gaining way more adoption other than just the developer community, because that's pretty much what it is now. And pretty much investors who understand the developer community. That's pretty much the entire ecosystem at this point. And so I think that's their biggest challenge moving forward, is to simplify their marketing. Once that happens, yeah, I think it'd be more of a buy. Right now, it's hard to tell if it's over or undervalued. I'm going to go with over at this point, just because of how much has been bridged from their layer 1 to the layer 2, rendering the layer 1 kind of a little murky.
Yep, and for me, guys, I kind of will echo the
He
same
bought it.
sentiment.
He already bought it.
I'll kind of echo the same sentiment, not right now. So the reason why, pretty much every reason he said, in addition to that, I don't like the tokenomics. I would rather invest into a project that maybe is not as good, short term, that is, that's maybe not as good, that has better tokenomics. Because a rising tide raises all ships. And I like to call, you have Bitcoin maxis, ETH maxis. I'm a profit maxi. I don't give a damn. You know, I used to get romantic about protocols, like, oh, they're about to be decentralized.
He fucked one. So, no, I'm sorry, no.
But yeah, you know, I used to get really romantic about the projects, but that made me lose a lot of money. Unless you're on the team, or you got tokens vested, or you're a founder, guys, get your money, take your profits, and get the fuck out of there. All right? So I don't like the tokenomics. It's better projects with better risk to reward ratios, not even just from a tokenomics perspective, but, you know, more overvalued. Like we talk about Pendle. They have a TVL that's much higher than the market cap, versus that being upside down. Even though, you know, they have the Atlantic and Pacific. Shit, the oceans connect. Even in the real world, so does these, right? So my trading strategy is, I have my main projects that I'm looking at, that I'm accumulating. As we get into the altcoin cycle, like to the, you know, as we really start to get into the altcoin cycle, as those bags pump and my take profit levels are reached, I have multiple tiers under my main bags that I'll look to cycle profits into, and Manta is under my tier 1. So if I make some money with my other bags and I'm looking to cycle into something, and I like the price action, you know, maybe some of the fundamentals are a little better by then, maybe, you know, the TVL starting to rise a little bit with the rest of DeFi, I might ape in a little bit. But for right now, I'm out too. But hey, Manta guys, Manta founders, I love what you guys are doing. Nothing but respect. I can tell that you guys are working hard and you guys are shipping. I can't say that about a lot of protocols. So this is not a video throwing shade. I do love what you guys are doing. It's just that I have a belief in the price action appreciation of other projects versus this one right now.
And I don't care what you say, guys. Markets.
He really doesn't give a fuck. I say stuff to him all the time. He's just like, shut the fuck up. Say no.
Markets move. They rely on narratives, pretty much. You can find a narrative in any market movement. Hence, the AI narrative that we've seen and the price action that we've seen corresponding with NVIDIA and other projects or other companies that just put .ai at the end of their name, kind of like the .com boom, for example. I don't think it's time, in terms of the ZK narrative or the roll-up narrative, to gain a ton of traction. I still think we're still in the early phase of that. I still truly believe the next big narrative is RWA, and we'll see if something else pops up after that. But roll-ups, ZKPs versus optimistic, I think that's going to be the next narrative. And so, by following the strategy he just laid out, that will allow you to capture both narratives, which corresponds or with corresponding price action that you actually want, which is to the upside because you want to make that cash. You feel me?
Yeah, and just to piggyback on that, one more thing. He said he thinks the RWA narrative is going to happen first. I think it will too, just because of what BlackRock's doing and all the things that's been happening. And I mean, you can look at it; it's already kind of started. While you have like the top L2s like Arbitrum and Optimism, they aren't appreciating as much. But I already have my L2 bags filled up. I talked about Optimism, I've talked about Arbitrum, I've talked about Polygon, I've talked about Blast. Follow my personal channel, Crypto Noah, to watch those videos. Those pump, and Manta hasn't pumped yet. I'll probably take some of those profits and put it into it, but I doubt that it'll happen like that. It'll probably come from my RWA bag or another sector, my layer 1 bag, because normally if one L2 pumps or multiple L2s pump, all of them are probably going to pump, especially because Manta is only number 7.
Shit, it may come from the degenerate meme bag, but we shall see.
Hey, more videos on meme coins coming soon. Subscribe to Crypto Noah. Subscribe to J Mansion. I'm going to take us out here. If you got value from this video, drop a comment, drop a like, subscribe. Let us know what L2 you want us to cover next, what RWA project you want us to cover next, what project you want us to cover next. In general, constructive criticism is always welcome in the comments. But with that, we thank you guys for tuning in. And we'll see y'all in the next one.
Like, subscribe, see you in the next one. Tell your mama. She gonna be like, hey, baby, who these young whippersnappers?